let's bring you all things money matters. And the rand is struggling to keep pace with global currencies as fears grow that more days of load shedding ahead will soften it further. The JSE overall managed to claw back gains amid local concern of inflation breaching the target range of between 3 and 6% in South Africa. Roy Mutooni is an analyst at ABSA Asset Management, and he joins us now to talk us through the latest market moves. Always good to see you, Mr. Mutooni. Thank you very much for availing yourself this morning. What is expected to move local and global markets today?
Morning, Dudu. So markets have opened pretty much down. What we're seeing is a little bit of a sell-off in Nasdaq's process and precious metals, both gold and platinum. Gold and platinum stocks seem to have sold off a little bit at the open, and it just seems to be a very muted session. I think the big drivers today and for probably the balance of the week will be company results. We're seeing a few mining companies announce results over the course of the day and the week, and also in the U.S. company results as well. I think we're also going to see a CPI announcement as well as, very importantly, PMI announcements across the world in China, in the EU, and in a couple of other countries, which tell us the level of economic activity currently going on in those countries. So I think it's a quiet week, but there's a lot of data which will be very useful to pointing out where the economies are going over the next 6 to 12 months.
Roy, I see you left out the power utility, which suggests to me at least that the markets are not tickled by news from Eskom. But how will the possibility of 100 days of load shedding over winter, as announced by the power utility, expected to impact the rand and investor sentiment at least?
Look, this is significant. I mean, if you think about it, load shedding is incredibly disruptive. It's been disruptive over the past 15 years, and you've seen exactly the impact on GDP growth. Load shedding impacts productivity, it impacts employment, it impacts investment. So if we already know that they're confident about 100 days, in all likelihood it will be more than that. So that's incredibly negative, and that's very rand negative. Remember, the big thing that's been holding up the rand has been our ability to export, to mine and export, and also process what we produce in our mines. And if there's no power, that's going to reduce, and that impacts the value of exports, and that's just negative. So, 100 days as they guide is a big negative, and that's probably also one of the things that's weighing on the rand and the outlook for the currency and GDP growth over the next component of the year.
In other matters, Netflix reporting losing over 200,000 subscribers in the first quarter. What's led to this unprecedented walkout by subscribers? Could it be that the new normal is going back to normal?
I think to start off with, I think you're right. COVID definitely increased the base level of subscribers they had because everyone was work from home. Everybody was sitting at home. But there's a few technical factors as well. I think first, they cut off Russia, Ukraine, which took out like 700,000 subscribers. If you add those back, they probably would have added about 500,000 subscribers. And then the other thing is that competition is growing. This is a market that has attracted a lot of interest. And there's people who are coming into the market with lower prices, better diverse offerings and that sort. So it's just become a tougher market for Netflix. In fact, for them, their guiding with regards to revenue growth has been quite disappointing. They weren't expecting any revenue growth for the next few quarters. So, increased competition, the fact that lots more people are sharing passwords, and just more difficult times, I suppose, are the key drivers of this decline.
Inflation data for the month of March is expected later today. Why is inflation such a critical risk for South Africa and the world right now?
So if you think about it, in South Africa, 60% of our economy is consumer-led. Inflation is power. So if you're in a situation such as we are, where wages aren't growing, but cost of living is rising, that just means you have a big impact on GDP in absolute terms and in growth terms. I think from a global perspective, when you have food prices increasing and energy prices increasing, again, purchasing power declines, and that's a problem. That's what causes all the unrest you're seeing in places like Sri Lanka and all of that. So inflation is a big thing. It detracts from buying power, it detracts from incomes, and it makes it that much harder for economies to grow. So that's why I think it's very closely watched and very closely managed. And in SA, as in the rest of the world, typically reserve banks will increase interest rates to try and head off inflation. Our biggest problem right now is that inflation is rising primarily because of supply-side constraints rather than demand. If you increase interest rates in such a world, you hurt demand as well. And in South Africa, demand isn't growing that aggressively. So that impacts ultimately growth and prosperity. So it's a big indicator to keep watching.
Thank you very much to Roy Mutooni from ABSA Asset Management.